Rohr here with an early global view on Tuesday, May 19th, 2015. It is currently shortly after 7 a.m. U.S. Central Time, and a global view is exactly what's necessary with a lot of movement everywhere, and that's based on some key fundamental drivers, including further signs ECB will accelerate its quantitative easing in the near term. Some very important data. So, what does all this mean to the markets? Well, obviously, the equities like QE, and in this case, because the bonds have been so beat up, they like it, and the dollar likes it. So we start with the S&P 500 as usual, hourly on the left, 30-minute on the right. And just to add right away where this is this morning, it's up $6 at 21.32. So, importantly though, even in spite of this being on once again negative data, but a central bank influence, we did have the old resistance up in the 21.12 to 15 area from the downside reversal going back several weeks ago, when the market was up on Monday the 27th and ended up lower, and that really held back the bullish influences into early the following week and early last week. By later on last week, the market had pushed up to a new high above the trading high from back on the 27th at 21.19, and yet he had stalled a bit, was chopping around it, and stuck around that 21.12 to 15 area, previous reversal from back on the April 27th. However, by later on yesterday, the market actually, by timely in the morning, it was starting to push out through 21.19 again, and that reinforces the bullish instincts for now. What's interesting about that is if the market's going to continue higher, then the next resistances are not until the 2140 to 45 oscillator resistance and the 2155 topping line on the weekly chart, and we'll look at those momentarily. And for now, it's going to be very interesting to see today where the hourly MACD managed to remain nominally out above the runaway band, upper runaway band, whether it can extend that or whether if we start to weaken, it can get back below it. Most interesting, the market was quiet enough on the rally so far, the 30-minute MACD didn't make it out. And while the stochastics look a bit overbought, as long as the oscillator indication remains out on the hourly, it's hard to get too bearish the market. That pretty much does it for the short-term view of the S&P 500.